Hey, George.
Hey, how's it going?
Not too bad. How's training
Did
been
you,
for you?
oh, did you see futures?
Happened.
Iran is being attacked by Israel. Futures are down really big, triple digits.
How interesting. I'm looking at futures right now. So there was a nice little pop and then the downhill.
Yeah,
Ooh,
because of the strike, the preemptive strike. Did you get my email? I sent you an email today.
I did not.
I sent it about 2 hours ago,
Nope. That's weird.
maybe junk folder.
Uh, let me see. Which email did you send it to?
The one that was on the email you sent out,
Gotcha.
because that's the only one I have. It was some suggestions. Now that you're the new leader, congratulations. And
Thank you.
I
Thank
had
you.
some suggestions, but they're just suggestions because this is your baby, not mine.
Oh, shoot. I just set up a new email and it's not properly set up, but I did get your email.
Cool. Read it maybe tomorrow or something. It's pretty
Okay.
lengthy.
I appreciate those suggestions, George. Because I was trying to think, what should I do? What will get more people engaged? So I was thinking of like breakout rooms if people want to do big breakout rooms.
I think what we should do is have an email. Do you belong to the Greater Northern California meetup?
Yes.
Okay, so have that so that when an email goes out, it goes to everybody in the group. You know what I'm saying?
Yeah.
And encourage people to participate because that group must have 1,000 plus in that group, and it's always the same 10 or 12 that talk. The rest are silent.
Yeah. I've been in so many online virtual meetings. I want to get people engaged. I want people to start knowing each other. I want people to start turning on their camera and just like being more of a conversation instead of me just speaking towards a black screen.
We got to get people, especially some of the more experienced people, to maybe present.
I'm still new to the whole group. I do know like Yogesh, you guys been every single time I've been on the meeting, I feel like I've seen you guys quite a bit.
Hey, how are you? Because there are some quite experienced people in this group, but then there's some that are not.
That's why when I do the breakout rooms, maybe I'll leverage your help, George. I need your help to get all the participant meeting lists. From there, I'll start like filtering out who's like a little bit more experienced, a little bit less experienced. So I can start pairing people with each other. So everyone something really good out of this.
Yeah, I'm experienced. I've been doing some reading. I want to learn how to options. Now, when I was with IBD or the early days, I always asked people, and especially I asked William O'Neill, and he told me, stay away from options. It's a sucker's bet. You don't want to touch them. But I've been doing some research from Nancy Pelosi, of all people. And what Nancy Pelosi does is she gets the inside of her information. She goes to her husband, and he buys deep in the money calls with a long term outlook of a year or sometimes more. And if you can get a deep in the money option, a call option with a 90 delta, that theoretically for every dollar that stock moves, you'll earn 90 cents. So it's almost like buying the stock outright. And because it's long term, it gives you a chance, it gives the stock a chance to move in your direction. But if that doesn't pan out and the stock doesn't, I don't know enough about options to know what are my alternatives.
Yes, so options, like I trade options and many different strategies are available in options. The one that you're talking about is basically, it's called synthetic stock, or essentially you're, instead of buying a stock, you're buying an option. And since you're buying Delta 90, that means if it moves for $1, your option makes 90 cents. That's how it works. But as you said,
What I don't
it's
know is what happens if it doesn't go in my direction. Do I just expires
So just
worthless?
think of it like the stock, right? If the stock doesn't go in your direction and goes in the opposite direction, and since one option equal to 100 stocks, if a stock drops by $1 and you have 100 stocks of that, then you'll lose $100. Same way, you will lose $90 because you have an option now. But you're also paying a time a value in the option. Options are leveraged product. As you see, when the stock goes up by several dollars, you will gain much more than what you would have gained by holding a stock in percentage terms. Same way, if it goes down, the loss on your stock will be much lesser compared to the loss on your option because it's a leveraged instrument. But at the same time, there are other factors as well. Like you may, if a stock is say $100, you will need $10,000 to buy 100 stocks. Versus if you're buying in deep in the money option, you may only need 8,000 or 7,000, depending on how deep you are going. So I would highly suggest that if you're new to options, then understand the intricacies and do some, if you have think or swim, you can do on demand or you can do some paper trading on some of the good stocks. Don't go for stocks that are not known. Go for NVDA, Palantir, Tesla, because when you're trading options, your timing matters a lot. If you're buying at a wrong time, then you could lose very easily.
That's why I thought if I put it in a far option that's like a year, almost a leap basically, and a year to a year and a half out, it'll give enough time.
True. But then again, like you are assuming that the underlying instrument will do better in a year.
Correct. It's a
Right?
gamble. It's like buying a stock. You don't know.
Exactly. Exactly. The only difference here is if I'm buying 100 stocks and let's say I'm not comfortable with the way it is doing, I don't want to hold 100. I can simply say, you know what, I just sell 25 and hold 75. You can do that with an option. Since it's a contract, if you only have one contract, you cannot say, I want to only hold 75. You just have to sell the contract if you cannot hold it further to limit your losses.
But if you had 20 contracts, you could sell 10.
Yeah, then you can. Yes, then you can, of course.
Okay.
Cool. Let me go, since we're already up at the top of the hour, I'll go ahead and start sharing my screen. There we go. I think this should be a lot better. And Floyd's with us too. Happy that Floyd joins us. So I'm just going to go ahead and start because I'll start at, so what I'm trying to do is I'll start at the top of the hour and then people can just start throwing stocks at me and I'll just do a live stock analysis. So welcome to the Investors IBD Anchorage, Alaska. Thank you for coming from all over the world. And I have to say this disclaimer first. This information is presented for educational and informational purposes only and should not be interpreted as investment advice, an endorsement, or a recommendation to buy, sell, or hold any specific securities. I am a volunteer and not paid for this presentation. Investing carries significant risks, including the possibility of substantial loss. You should conduct independent research, carefully consider your financial situation, and seek professional guidance before making any investment decisions. Neither I nor any associated individuals accept liability for any investment decisions based on this information. So let's start off. Let's go on market search and let's analyze some stocks. What do you guys have for me? Which one?
Circle, the brand new IPO.
Oh, Circle.
I think it has a lot of potential, but still have to wait for a base.
1, 2. The base is forming for 3 days. You have a 1, 2, 3, 4-day base so far. We don't have any institutional ownership.
I think whatever crypto will do, so will Circle. They use, it's the second largest stable coin after Tether. They use the euro, I forget the symbol in Europe for the coin over there.
Let's see. I do know a little bit about crypto and I like using. Are
you sharing the chart?
I'm sharing. Oh, this is the chart. It's literally nothing because it's an IPO. Ah, you are right. Are you able to see the chart now?
Yeah, now we can see.
Thank you, Yogesh. So for Circle, we do see on the first 3 days, there's a base, and then it's basing for about 4 days now. We look at the fundamentals. It's growing sales. It's actually made money for once. It made money in 2023 and 2024. That's a pretty good sign, especially for crypto. I looked on what is Circle payments. So it's a financial like PayPal for USDC, or even the euro. And they have tokenized USYC. I went to CoinGecko and I started looking at USYC and see how it's doing. It's just another probably a tether to the US, but who knows? The market cap for this is 400 million. Okay. It's not huge, it's not small. Otherwise, I would keep watching this, especially if it goes into a little basing stage over here for another 2 weeks. That would be amazing. If you were really stretching the rules a little bit. But I do like this action over here. It's a little handle. The volume is a little bit lower.
Yeah,
I would
if it
definitely
takes
watch
out of
this.
34, then it could be a good one.
Yes, I would. You can even do an early buy at 33. Or if you want, could even, that's too steep of a trend line. Let's try this trend line instead.
What does it say? It says at the top it does BEVs. What is that? Something electric vehicle? Right there.
What is BEVs? Let's look
I
at the
don't know what that-
website. What is this? It's just a car company. What is anyone know what BEV is? Battery electric vehicle. Interesting. Maybe they're not going for just EVs anymore and just categorize them more specifically into EVs.
It's going to have a lot of competition to be BYD.
Speaking of BYD, let's see how they're doing. I haven't looked at their stock in a while.
It's killing
Consolidating.
Tesla.
Consolidating.
No, that's not. That's Boyd Gaming.
Oh, thank you. Consolidating, little uptrend. Weekly, it probably looks beautiful. Little whipsawy. Let's see how Tesla is doing. Tesla's not on my watch list only because it's just so much whipsaw action and so much of the news, so much news driven right now, I believe, of all the Doge and Trump and our little tips on X.com. Would
I
anyone
heard
say
that
this?
Elon was groveling back to getting good graces with Trump.
Dang, I don't think this is any kind of base.
It's a wedge.
That's it. It's just wedging. Who knows what's gonna happen next? Next stock. Yeah, 6 more minutes. So switch
APLD.
APLD. Side digital. I haven't traded this guy in ages. Who owns it? No big funds own it. Sales going up. Still bleeding money though. And this is more of a crypto structure play. What makes you attracted to APLD?
Looking at the chart, though, I was just looking at some fundamental parts, some positive things that I was reading about it recently.
Oh, interesting. It's a crypto and AI stock. Interesting. What else you got for me? If nothing else, we can go through some of my screens. Is there anything that looks like a high tight flag? So we can look at Avia Technologies. Ooh, that guy is flying. It's making money, making more sales, but it's still negative sales. No big institutional. Barely liquid. 400. Yeesh. 40 million. Barely anything. Carvana. Didn't really break out high volume, but it did almost hit a 20% profit margin.
Jim Chanos suggests that this is a short.
Why? Did he say why he suggested this was a short?
Because they're along, I believe they finance high-risk people, and people are getting further and further in debt. And Carvana, one that I've been waiting for over a year is CACC. They do loans to high-risk people. And when the economy turns south, the high-risk people default on those loans. The same thing with these buy now, pay laters. They got people financing Burger King. That can't end well because those people, they're just one step from defaulting all that stuff. And that could be crucial for these type of companies.
Holy moly. You're telling me I can do 0% down and just finance that for 10% a month? I see why. I can see why it's a short play, because they're actually paying for people's cars, especially if high risk borrowers are buying it. You're telling me $0 cash down at $600 at 10% APR? That's insane. You can see why that's a short cabinet. I have to trust that it's a bustling economy. And right now it's not a bustling economy with all the tariffs and wars that's going on.
But people are still spending like crazy.
But their savings accounts are going down. Even though they're spending more, their savings is still on par. They're still saving about 5% of their income. So it's not too crazy out. And
Yeah,
we're
but you
looking
know
at
what? A lot of people are left the workforce. They're not even looking for jobs.
so personal consumption is actually going up. Also
Best
going up.
indicator of recession is the credit spread, high yields credit spread. If they are rising and if unemployment rate is rising at the same time, then you have 100% recession. It has happened every time both has gone up. But if high yield credit spread goes up, but unemployment rate does not, then you get a correction or bear market, essentially.
Where do you go see the high yield credit spread?
You can just Google it and say Fed and they say high yield credit spread and you'll get it. Oh, that's it. You had it.
Okay.
Yeah. And you can go and add, you can go edit graph.
Also, in the past few months, it's been coming down a little bit, and we'll look at unemployment too.
Oh, you can add it on the same graph. Yeah, just say edit and go to add line. Yep. And there you can type in unemployment rate.
That's pretty cool. So generally speaking, unemployment has been pretty steady since 2022.
Yeah, but do you really trust the unemployment numbers that come from Washington? I don't. They're always revised later on.
They are, because there's always the best guess at that moment. Cool. Let's get started to our main agenda. So thank you everyone for joining us. We have a total of 18 people today. Not bad. So welcome. Just a reminder, educational purposes only. We just did a livestock analysis, and today we're going to do the market recap of the big picture. Then we'll go to the main presentation, then some Q&A, and then save the date. So JDSG is my first ever stock in the 1990s. I'm investing for 20 plus years. I've done air IBD since the early 2000s, since I was ever introduced to it during my Morgan Stanley internship. I'm a full-time winner, and some of my best gains is NVIDIA with 5,000% gains. I'm not sure if you guys will find this valuable or not. So I use interactive brokers to trade. This is my past performance for the past year. I figured this might add more credibility for you guys. So for the past year, I've been switching over more into a macroeconomic analysis, where how is the world affecting the stock market, since the stock market is forward looking. So how I've been doing, I've made some decent money 1 year ago, and I went up. I went down. That's probably about a 7 to 10% loss on portfolio. I tried a little bit more. It didn't work until most recently, about 2 months ago, my account started to skyrocket again. So I'm almost have 40%, 39% gains in the last year. And the only thing I'm holding is 100% in TQQQ. Oh, any questions on this?
So what's the system you follow on TQQ? Is your 100%? Do you say 100% of your portfolio is in TQQ?
Correct. 100% of my portfolio is in TQQ. So initially, I still follow IBD. So I use IBD as my follow through day. Once I hit follow through day, I start doing market school, and I go 35% invested, 25% invested, then 20, 15, 10. And I believe that adds up to 100%. I simply follow market school because I have an Excel spreadsheet. And once the follow through day hits, I just input it because I have multiple trading accounts. So once I input it, it just tells me how many stocks I should buy rounded to the nearest 100.
when you say you're 100%, you mean your entire net worth?
No, this is just one of my stock trading accounts.
That's right. That's still pretty aggressive. Huh?
I remember Ralph Desmond of the Walnut Creek IBD meetup leaders. He likes to ask this question: what percent of my net worth am I putting into this one? This is probably less than 1% of my net worth. So even if this account explodes for me, it'll be fine for my net worth. Some of you guys might or might not know, I do a lot of real estate in the San Francisco Bay Area. And I do a lot of investments here and there. And I try to shift investments here and there. So the big picture, what are we looking at today? The stock market exposure is at 80%, is at 100%. There's 3 distribution days on the NASDAQ and 5 on the S&P 500. So some of the up leaders is, I actually was surprised. I see a lot of mining and gold. There's some tech here and there, and leaders that are down is aerospace, a little bit more tech, some pharma, and also Sprouts. And everyone's favorite is polling time. So I'll go ahead and ask you guys some poll questions. I've added a few questions today. I just realized maybe I should have made individual polls. Next time I'll make it individual polls instead of 5 polls at once. I didn't realize that was going to happen. So a little about me, I'm from the Pacific time, so I'm in San Francisco, California. So how invested am I today? I'm 100% invested, as you guys all know. A little bit about the third question, breakout rooms. What I mean by breakout rooms is that I'm going to try to group individuals together in groups of 3 to 4 people. I'll try to pair some names I do know who have more experience with people who have a little bit less experience, because sometimes there's a fear of public speaking. So I'll try to place people together accordingly to making sure everyone's a little bit comfortable. These breakout rooms will last about maybe 15, maybe 20 minutes, just a little bit of time for you to get to know each other. The variation to that, I could do 5-minute breakout rooms. So you can meet about 10 people in one session. So if anyone has any opinion, if you guys rather have 15 minutes with 3 people, or we're gonna have 5 minutes each with 3 people, let me know. And the last question, no, the fourth question is levered edge. If you don't know what it is, just say no. But lever edge was the formula was initially founded by Floyd. And Floyd worked with Gary Taylor to form a certain system. So for this presentation, I did include a leverage edge update to most people. And I'm curious if people will be interested in learning more about leverage edge. And the last one is, did you want more communication month to month? Instead of every single month, you see an email from me. Or I can make a Google group so that when a topic comes up, like today, where it's like, I'll bring up a topic. Where today, a topic comes up is where there's a war that just happened, an announcement. So Israel and Iran. So you said Israel attacked Iran or Iran attacked Israel?
Israel attacked Iran, preemptive.
So Israel attacked Iran. So that's what just happened to the futures. It was a gap up and then it started going down. We don't know what's going to happen this morning, but you can see the Russell 2000 is already 2.59%. The Nikkei, the Euro, when it's already open, is already going down. VIX is going higher. So we have, another person join us. Welcome. So let's go ahead and, oh, wow. It's 100% no on the breakout rooms. Okay, let me go ahead and end the poll and I'm gonna share the results. So how invested? So if the person does want to speak, 0 to 20%. I don't know who answered that, but how come 0 to 20 when IBD is at 100? Okay, moving on. We will not have breakout rooms. 8 people answered straight no. Got it, easy. Are you subscribed to Lever Edge? Not. So we're 50-50 split on Google Groups. I feel like not answering is probably, might be worth it, might not. But we'll see. I'll try to make sure. One thing that I really don't like is like spam in my email. So I do a lot of email work. So I try to do daily updates instead of topic to topic. And there's also moderation that's needed because someone can randomly join the Google group and all of a sudden they're spam. I'll answer that question shortly, James, for the leverage edge system. Any question on any of the poll questions? So thank you everyone for answering.
Haley, you can restrict who gets to join the group so that you can control spam. Just Lee Tanner's group, they police the activity there, so there's no spam.
That is true. If someone writes a new topic, I can't always make sure that's approved by me before it gets posted. Because I've been in different groups where I'm like, this is a sales guy who's trying to get more commission off his job, spamming this group to buy the software. I'm like, this is just annoying. Thank you, James. So we just finished the polls. And we talked about the Israel to Iran strike. And James asked a very good question. How is levered edge doing? So this is updated to June 6th. So a quick overview of levered edge. This is the buy signal when the blue line crosses the orange. This is the sell signal when the blue line crosses below the orange. So how is it doing? So pretty much there's been a buy, re-entry buy, there's a stop. For this year, there's been 3 trades, and you'll probably see from January 17th to May 30th, you'll see about a gain about 42%. It's probably a little bit more like 45 now because we're a few days in and things are better. I hesitate to say that because I just looked at futures, which says you could experience a 3, 4, 5% down day. So your profit of 50% might be 40%. This is daily.
Okay, thanks.
So this is on the NASDAQ, but let's compare how the other charts are doing because not all, YX, yep, Huxton, my TQQ selling rules is going to be terrible, by the way. So I'm going to explain. So this one, the chart you see here, the top, you see a Soxel, CECL, which is 3X Technology Bulls, and a bunch of other ones. So Soxel, surprisingly, is doing pretty well in the past month. So you get to see performance all time according to the levered edge strategy. And of course, I'll send this presentation to everyone. So YX asked me, what are your sell rules? So let's go ahead and go back to my Market Surge. I'm starting to become one of the old timers where I'm used to another completely different name. Everyone can see this chart pretty well, or did you want me to zoom in a little bit more?
It's pretty small and then we can
Okay.
is wing in the wall.
I'm gonna zoom in 1, 2. I'm gonna take off this screener, and I'll go to my markets list. Actually,
Nice.
let's go to my TQQ because I actually have the buys and sells. Oh, let's go to my weekly. I haven't updated this very well. So pretty much, what are my sell rules? So I have a few sell rules. The first one is, have I made enough money this year? If I've made enough money, and my target's usually about 25% every year. If I hit my target 25%, I can just sell and just be cool and just chill out for the rest of the year. The second sell rule I have is IBD Market School. I can sell when Market School sells. My third rule could be when the window of opportunity, when Steve Sweats says this is closed. And my fourth sell rule is I could sell it when there's enough distribution days or distribution clusters that's on IBD and they say stock exposure goes to 0. So that's the art of my TQQ. CQQQ. It's that depending on the situation that's happening on my own psychology and also the market, that's when I decide to sell. So that's why I say it's terrible because I don't have one rule. I just decide, hey, this is enough money for me for this year on this account. I'm looking at a 10-year horizon. If I make 25% every year, that's pretty darn good. Okay, any other questions? let's get going to the presentation. We're just getting started with the presentation. So you guys join other IBD groups, which I highly recommend. Michael Miller, he does something interesting. He says, hey, CanSlim still works, and I want to do something called MANSLIC instead. Why MANSLIC is because he's in the same mentality as me at the moment, where it's all about the market. So what is since IBD, it's a trend following system, the market has to be up. And the market's up. That means I have the most likely chance to make money inside this market. So that's how I came up with the presentation. We're getting reminded of what is the CanSlim system and is it still valid 70 years later? And the answer is yes, it is. So just as a reminder, what is CanSlim? It was developed by William O'Neill back in the 1950s, and it blends fundamental and technical analysis. It's not only fundamental analysis where you look at PE ratios, sales, earnings, or book value. It also looks at price action. Some people do say price action looking at a bar chart, looking at a candlestick. It is black magic. But hey, to each their own. Find a system that you trade that fits longish personality. So what is CanSlim? Some of us haven't picked up this book in 20 years, maybe 30 years. But as a reminder, the C in CanSlim, it's year over year EPS growth of greater than 25%. Current quarter EPS growth of greater than 25%. Not month over month, but we're comparing seasonal too. So you're comparing December to the summer, comparing winter to winter. This is especially relevant on consumer products. Are you growing annually? Are you able to get more income revenue for your company every single year? What is N? Is there a news driving a stock? Pretend. Israel just attacked Iran. Should I be investing to aerospace companies now? Because now there's a need for more ballistic missiles. Is there a need for more helicopters? Is there a need for more raw material? Who's supplying Israel? Is it the United States? Is there a new leadership? Leadership could be a new CEO inside a company. It could be some new FDA approval for a biotech company. It could be a new toy like Pop Mart, who did the Labubus. And that leads into new products. Is there something that the consumer or the enterprise market is buying that it can't get enough of because it's just that much better? And that's the end factor. Supply and demand. So what that means is there's high trading volume and there's a lot of people buying. We are not trying to buy stocks that are relatively penny stocks. We're not trying to say, hey, the stock is cheap, right? It's 50 cents. 50 cents does not mean it's cheap. What could be cheap is $100,000 stocks from Berkshire Hathaway because their book value it's greater than their market cap. So that might be cheap, even though it's $100,000 for it. And demand. We're trying to buy growth stocks. Typically, those are dividend giving stocks. Sorry. Zoom sent me a message and I got sidetracked. So typically, we're trying to buy stocks that other people want. That's what the new comes in, where we want a news to be generating more stocks. Say, hey, maybe Elon Musk is making the Cybercab and it actually works and he's delivering on time. That will make an unprecedented news. And there's 100,000 orders for the Cybercab. Leader or laggard? You want the best company inside that industry. So since we're on cars, is Zeek better? Is BYD better? Is Tesla better? Is Ford, Toyota? Which is the best, most innovative company? Maybe they have a new CEO. Maybe they have a new product coming out. But you have to make sure, are they selling more cars? Are they able to generate another source of revenue? Maybe there's a software subscription like BMW cars. Nope. And this, to me, is very important. Institutional sponsorship. So why that matters is because they own trillions of dollars. They're not mom and pop. If you have 100 billion, 200 billion, they're a whale and they can definitely move markets. So you want to make sure when Fidelity Cloud Fund starts buying every single quarter and they're increasing their sponsorship, you are also trying to see why they're doing that. And it's a good time to get in them. Are they just starting their position or they have finished and they're offloading? That's why institutional sponsorships matter, because all of a sudden that $100 billion hedge fund, they won't be able to move that market. So what's interesting about that M is making sure that you're in the right place at the right time. And I can't emphasize that enough. If you're in the right place at the right time, there's so much more opportunity to be had. Imagine if you're in 2020, all of a sudden COVID just got hit and you're just like, I'm going to go full throttle because I'm going to bottom fish. And if you're bottom fishing for the short side, maybe good. If you're bottom fishing for the long side, who knows how much further the bottom is. And that's why market direction really matters, because you have to make sure that the direction of the market is the direction you're trying to trade in. I'm not trying to say up, down, or sideways, because there's a few option players here who would pull the iron condor when it goes into a sideways market. And that's the perfect environment for them. Versus others like, hey, I just buy stocks, I just do long. Other people say, hey, I make it big with shorts. So just summarize. Look for stocks that are high growth and you're trying to step in before all the institutionals step in. Because if all the institutions step in, where's there more money? Imagine if there's no more money inside the money market accounts. What are we going to do? How there going to be more money to drive up the stock? It won't, because it's supply and demand. If there's no demand and people keep on selling, there's going to be too much supply and the stock's going to go down. Remember, CanSlim is for bull markets. There are classes and workshops for shorts. But the number one rule of CanSlim, just like what YX asked, is that you make sure you control your risks. You have a 7 to 8% stop loss, or maybe you buy a half position and you do a 14% stop loss. This is just a basis for stock trading, because we have to trade to our personalities. If we don't, we lose sleep. And when we lose sleep, we get messy the next day, making that into a recurring cycle until Ouroboros. It gets real bad. Once a very nice retirement account, starts to do something very different. And that asked a question. I'll get to that in just a moment. And I did talk about high risk. So I'm going to pivot a little bit just to answer Pat's question. Pat asked, have you studied how you would do with TQQQ just following the market school guidelines? The answer is I used to follow IBD to market school to a T back in 2018, more than that, 2019. And I was able to sell at tops. I was able to sell a little. I was able to always sell a little before market school because I have another account. One stock is pure TQQQ following market school. I dedicate to it. The second account I have is my leaders account. It's that if the stocks I have, they should be doing well because they're the market leaders. All of a sudden, all my stocks in the leaderboard is going down and QQQ is going up. Not just for one day, but it's going down for 2 or 3 days. I'm like, I think the market's cracking because I had the canary in the coal mine. So I do have verified trades back in 2020 timeframe that says I typically, because of how I trade the market, I get a faster sell signal than TQQ. I've been right about this about 75% of the time, give or take. So it's not 100% batting rate. I'm usually a little bit faster 75% of the time, but I have missed some uptrends because I just want to sell. I hit my annual goal of how much I want to make on the account. Hope that helps, Pat. Back onto the presentation. What is MANSLIC? So MANSLIC is pretty much saying we're caring about fundamentals a little bit less. Beautiful, Pat. We're caring about fundamentals a little bit less and more going into the market. Why? Because I see your question. I'll answer in a bit. So we will care about the market more because we're in a trend following system. We're trying to time the market. This is the IB system. Some people do not believe in timing the market, which is the coolest of most financial advisors. There's no timing the market. You're always in the market and you always have to have stuff invested. Why? Because the financial advisors say, hey, the market goes down and your portfolio goes down. It's the market. And if it goes up, it's like, hey, I did well. It's my performance. But there's always something to blame. Versus if you try to time the market, the only person you have to blame is the financial advisors themselves. So why XTAX? Are market school guidelines available on IBD website? That's his first question. It is. I don't believe it is available. I have written my own market school, but it's a little bit complex. It takes a little bit of time to study. Since I'm now an IBD meter, I'm not sure if I could share with you guys because it's IBD intellectual property. But let me ask Amy Smith about this and I'll get back to you. So do I need to become a subscriber IBD product and enroll market? You do not. So there's two things about market school. So there's two things to do market school. First, you can go to the store and where is it? Go to the online courses and can buy market school. So you can buy market school. So after you buy market school, you get to learn the system. You have to buy market school first, and then you have to subscribe to leaderboard. And after you subscribe to leaderboard, which this frustrates me quite a bit actually, after you subscribe to leaderboard, there's another subscription you have to buy you have to keep on buying market schools, supposedly. This is leaderboard. You have to keep on buying leaderboard to get the market school updates every single day. But the market school leader, there's other IBD groups that will update, like Michael Miller, that updates market school and tells you how invested they are. I think you have to buy rebuy market school every 3 years to get the leaderboard updates too. And that's, come on, guys, really? I already bought the class, I bought the leaderboard subscription, and you're telling me I have to buy market school every 3 years to keep on getting the daily updates from market school. Sounds like a money grab after they sold to Dow. But personal opinion, not the opinion of IBD. Do not want to get in trouble. Oops. Back to the presentation. That is not the presentation. So MANSLIC was something that's really coined by Michael Miller in New Jersey IBD meetup. He's the one who also does market school updates inside the Google groups. That's why I was suggesting maybe we do Google groups so we can have a thread of like how market school is going. Because someone from New Jersey might be able to update Anchorage, Alaska. And it prioritizes timing. This is the key, right? We're a timing system and technical confirmation over fundamentals. So how does this work out? Pretty much the M and the C just got switched around for the sole reason that he wants to emphasize market. And that's literally about it. Oh. I'm going to pause here and address Pat's question. Guys, let me know if switching back and forth is like too crazy for the brain. I haven't checked Woo in a while. So Woo is Steve Sweat's system, and he updates it every so often. I'm going to search for Woo. So I did mention Woo a little bit, where he keeps the IBD market correction, the S&P 500 distribution days, NASDAQ distribution, and the counts, and what is the condition. Actually, Pat, where does he show market school? But that's a discussion for another time. So, why MANSLIC versus CAN-SLIM? Some of us here are new to the IBD system, so CAN-SLIM is the acronym that we're all used to. So why MANSLIC versus CAN-SLIM? Thank you, Pat. So Pat says Greg's is posted on his X account. So we shall all follow him on X. So why MANSLIC versus CAN-SLIM? It's just a little twist based on the old system. And it's just to remind everyone, the market really matters. One of your account is your leader. You have to see how your account how your stock trading account is behaving to the market. Sometimes we might have imposter syndrome and saying, do I really know what I'm doing? I've read the books. Have you traded for a while? Even though you've not beaten the market, how are you doing? Are you following the rules? If you are, you're probably a pretty good trader than most. Because you're following the rules, you have a 7%, maybe 14% stop loss. You're making sure you're finding stuff in technical bases and you're making sure it's breaking out properly. And that means you're already a pretty darn good trader because you're disciplined. If you remember Jack Schweitzer, Billy got his name, he interviewed so many people, and there was one day trader out of like hundreds and not thousands of people interviewed where they go by their gut. Otherwise, most people have a rule-based system of how much to trade, of portfolio management, of what to trade, and their circle of competence. So that's why MANSLIC is here. It's mainly to just tell you guys, hey, pay attention to the market, and your portfolio is part of the market because you do buy the top leading stocks inside industries, and you buy fundamental stocks too. And just remember, even though you buy the best, 3 out of 4 stocks do follow the market. And that 25%, sometimes you might get a batting average of every 2 stocks you buy, you lose 1. So maybe 50% on 2 stocks, on 2 positions, but you lost 7% on 1. Not bad. That's pretty darn good. Or you can even do 3 losses and 1 win. And that's okay because you're still up 4% because 3 times 7, 21, and 25% on 1 stock. So 4%. Just remember, sometimes I've seen Can Slim go into like sales mode. What I mean by sales mode is even though the company have no earnings, if they have 100% sales, the stock might go up. And I'm like, what the heck? And the past me would say, nope, don't buy that. I follow my rules. I follow my discipline. And I'm not going to buy any stocks that's not making money. And since I've relaxed it, I've seen those stocks. It comes up my screens, and I do have specialized screens on my markers. And that's just a reminder. There's always like core IBD style, especially on that MANSLIC. Follow the market. 3 out of 4 stocks will follow the market. Buy growth, not value. We're not trying to buy AT&T and Verizon. Use charts, not opinions. We're trying to say, hey, look at the bar chart, see where it's going, and see what it turns out. And this is very important. You manage risk ruthlessly because math works out to be the escalator up and the elevator down. Because you guys probably already know this. If you have a 50% portfolio drawdown, how much do you have to make to get it back? 100%. And that's why all this matters. You have to be disciplined. You have to be patient because success comes from being able to repeat your past success, not from my gut feelings. And sometimes sometimes the stock market goes up 30% in a year. And I just don't make it. I just don't make that 100%er in that year because I was like, I sold too early. But it's like, hey, I made 50% that year. I'm a happy camper. 50% portfolio gain. Who else can say that? So my final thoughts. Both systems stem from William O'Neill. Their personal interpretations can some work better for Bill O'Neill, but and MANSLIC works better for Michael Miller. Your edge really comes from knowing how and when to apply each and every single rule inside your trading skills. And I always say, stick to the system that fits your personality, time frame, and conviction, because without that, it's hard to sleep at night. And sleep is quite important. Any questions? I didn't want to go over and talk too much. I really wanted to be more interactive. So did anyone else want to share things about themselves, about what they're thinking, about what they think about the market, or even trading styles? I'll go back to the agenda.
Yeah, it's Floyd here. I can say a little bit.
Hey, Floyd.
Hey, guys, last month I did a presentation on the zero-date SPX options, and one of the advantages, and I've been trading them now for going on, it's the 3rd month, about 10, 11 weeks into it. Success rate continues to be surprisingly good to me. But I would like to say that the action that we're seeing tonight after hours is a little concerning. Who knows what the retaliation could be from Iran, and the Middle East is a hotbed. But the nice thing about these zero-date SPX options is the options that I put on today all expired about 6 hours ago. When the bell rings, they're done. And if something happens 5 minutes after the closing bell rings and the market takes a huge swing up or a huge swing down, you're out. All of your options expired. To me, that is a pretty powerful thing about it. The zero date SPX options, they trade every day the market is open. You can't trade them after hours or pre-market. You can only start trading them after the morning bell rings. They literally expire at the closing bell. Any profits you make, though, one of the nice things, any profits you make, 60%, even if you only held something like today, I had bear call spread that only was in existence for about 15 minutes. The profits I made on that 60% are taxed as long-term capital gains, even though they only had a 15-minute life. You can, if you're in a taxable account, you can trade on margin. And so if you didn't hear the presentation, it's recorded. You could go back and watch that. You have to be extremely careful. There is risk. It's not for new investors, but if you study them diligently, and there's a lot of good videos out there, and if you go in with my approach, which is different than a lot of people's approaches, going with an extremely low delta opening position, your short call, if it's an iron condor, your short call and your short put should have a delta around 3 or 4, which means if the delta is 3 or 4, it means you have essentially a 90% probability of success. Now, when you go with an extremely low delta, you do give up premium. So everything has its pluses and minuses, but I don't mind giving up premium for the fact that the majority of my options, I'd say, expire worthless. They don't require any adjustments at all. They don't have to be closed out early. And then if you let your options expire worthless, it has two advantages. One, it doesn't count towards you being declared a pattern day trader, which it doesn't really bother me. I am a pattern day trader, but some people don't want to be. So if you let your options expire, it doesn't count towards the pattern day trade. And if you don't adjust and don't close, you don't pay another set of commissions and fees. And on some trading platforms, on SPX options, the fees could be as high as $1 or more per contract. And so if you're trading 100 contracts, that's $100 in fees and commissions. I'm continuing to find to be very interesting and very rewarding. This month alone, every single position. Let me make sure I'm telling the truth here. No, this month, I traded every single day. I had one day where I was down $900. So I closed early on that one, but all the other days, except for one day, every single option position has expired worthless. And it's really nice to watch. You go in on your initial position and maybe you're going to make $500, $600, $700. Maybe you're going to make $1,200 or something. And to watch that slowly decay all the way down to zero at the closing bell. I'm confirming that the presentation I made a month ago, I'm still practicing that with what I feel is good success, and I'll continue to report on how we're doing. I'll see if there's any questions about that. But just have to be careful that if you go with the traditional iron condor with a delta of around 15 or 20, instead of my philosophy of going around 2, 3, or 4, if you go a delta of 15 or 20, you're going to get stopped out more frequently. You're going to have to close and you'll have losing positions. On the positive side, your winning position will probably make 2 or 3 times as much money as the way I'm trading. So that's all I'm going to say for now. Everyone be careful. At the opening bell tomorrow, we're probably going to see a gap down on many securities and many indexes, and I would suggest that you not jump in. At least I'm going to tell you what I'm going to do. I'm not going to jump in at the opening bell because we do not know what's going to be going on in the Middle East and how that may affect market sentiment. And we could see very increased volatility here for a while. And so just see that as a red flag towards the security of your trading account.
Like, I was curious because I was like, the market is slowly starting to trend up a little bit, and you're doing iron condors. So I was like, this is still good to trade. Apparently, it is.
But the absolute most that you can own that iron condor is 6.5 hours if you buy it at the opening bell. Most people don't do that. So your iron condors are going to last between 10, 20, 30 minutes, 2 or 3 hours, maybe at the most, maybe your early morning iron condor maybe is out for 4.5 or 5 hours. So if you look at the average true range of the S&P, it's not on a daily basis. It's not a very large number because if the market gaps up, it gaps up before you can execute your first trade. If it gaps down before you can do your first trade. And so you're only playing the daily range after the market opens.
I'll send you the link for Floyd's recording last meeting. It was quite spectacular how he did it. There's not a lot. When I was looking over Floyd's presentation, I asked him to make some charts, but I realized same day expiration options work very different from other kinds of options. You have to get specialized in same day expiration options because I used to trade leaps. So I used to trade Breakout 1 year. And it was very different. And I had to work my mind around it. But it was really cool.
And if you haven't traded the 0-date SPX, either paper trade it, or if you want to go live on it, limit yourself to 3, 4, 5 contracts on your first few trades so you can get a feel for how it behaves during the day and you won't get hurt as bad as if you went 20 or 30 contracts. And so do baby steps, get your feet wet, see the good, the bad, and the ugly, and experience the emotion you have, because on some days, I think there's market manipulation going on. And a couple of days ago, we saw the S&P drop 10 or 12 points in about 3 or 4 minutes. And it was a little scary because you don't know when the market's going down vertically, you don't know where it's going to stop. But then after it went down those 10 or $12 in just a few minutes, then it reversed and turned around. It ended up closing at the high of the day. And so I think there's some guys out there playing games a little bit on these indexes, and they're trying to force people to get stopped out and have losses. Now, it's just a theory. I can't prove it. I did take a very comprehensive course a few years ago from an organization called Options Animal and took about 50 of their lessons and went to 4 or 5 of their live events in the lower 48. And they talked frequently about in the options market manipulation. So if you go with the very low delta iron condor, the manipulation is just static to you. At least to me. To me, it's static. I don't let it scare me. I watch it pretty closely. Here's the big disadvantage, guys. If you're going to trade the 0-date SPX, you can't place the trade and then go away for 3 hours. You got to be able to monitor the prices, I'd say at least every 10 or 15 minutes, or you shouldn't be in that game. And so if you don't have the ability to do that, do not trade a 0-date SPX, because an hour or two after you buy it, you may need to close or you may need to adjust. And if the market, let's say that Israel decided to attack Iran when the market was open and not when the market was closed, if they did it when the market was open and you have SPX options open and this thing gaps down hard, you could see a very significant negative impact on your account value. As a word of caution.
Like Floyd, have you tried using TD trades automated rules where you can actually put in a trade and put your rules when to close it? So if you're away, you can still close it.
I have not. I know some people do that. I'm monitoring it myself and making my own decisions, but there are ways to automatically execute. I think the problem with these market manipulators is if you try to put protections in too tight, when there's a 2 or 3 or 4 minute or 6 or 7 minute downdraft on the S&P, it will probably cause you to exit at a loss. and then for the S&P to go ahead and go higher for the remaining of the day, and you could have made some really good profit, but because of the short-term downdraft, you get knocked out of the market. So my advice is, if you put in like automatic trading exits, don't make those very tight or your position will be closed on you. Am I answering your question, Yogesh, correctly here?
Yep. Thank you.
Okay. So far, I haven't done that. I'm going to have a meeting with a trading representative here next week and spend about an hour with that person and see if I wanted to put in like cancel the other order, the best way to set that up to provide some protection, but not too tight.
So Pat asked the question. Sounds great. Good presentation, MANSLIC. So thank you for the confirmation. Let me show you on a chart what I still use standard. Oh, let me share my screen. I still use standard IB default day rules. So what is an uptrend? So if we look at a weekly chart, it's a little easier to see. I do want to participate in these uptrends whenever it goes up, but sometimes it's hard to know when the fall through day hits on, let's say, the second week. And then all of a sudden you're on the third week and you're hitting right above the ceiling. And then for over a month, you're just going sideways. It's really easy to get stopped out. And that's when just doing a triple leverage index hurts a little bit, because it's like you question yourself. Is this really correct? Is this really true? But it gets easier to have that confidence when it's like, hey, here's my follow through on this week. All of a sudden I'm up 3%. Then I'm up another 7%. And all of a sudden you're already up 30-40% by the time you hit this week. Sometimes it gets really easy to hold, but other times when it hits like this, it's just really hard to hold. So that's why timing really matters, because you do not want to be in a situation. Let's take a look. I want to look at 2016 and 2015. These situations are the hardest because it's not really an uptrend, or it's not, and it's trending ever so slightly downwards. What ends up happening is that you're in an uptrend. Hopefully you're holding this entire time. Then you probably sell it over here when it starts getting downtrend. Maybe sell over here. Then you might have follow through days here. That's why before IBD, they says it's either 1 or 0. You go 100% in or you're 100% out. I did not fully like that because I saw my accounts get whiplash, where when you're at the bottom of a bear market, you can have 3% down days, and all of a sudden that turns to a 10% portfolio loss if you're 100% invested. And that can happen the next day. It hurts me a bit to see that, because who likes losing money? It's like a double whammy. So that's why we always try to have that follow through day, and we'll slowly start getting in. And someone once said, we get in by using a shotgun. There's a bunch of little pellets, and we try to get as many little ones that's on our watch list to see which ones are the best suited. And from there, we can pick a little better and think a little bit more specific. Over the helps, Pat. So you still have some time. I'll talk about one thing that I've been thinking about. So I'm triple leverage into TQQQ, right? So what ends up happening in triple leverage is that when you're at a high point, especially on the NASDAQ, we're at 19,622. The high is 20,204. What is that? We're like 1% off, something like that. 1.3% off on high. So I'm like, are we going to hit a ceiling? Because that is definitely a resistance, because previous highs typically are resistances. So was there a situation where I hit a new high and then I undercut the previous low? So I started checking back. Does it undercut the previous low? No. Previous low? No. This one does. But guess what? It's not the current market, because there's an uptrend that's going up, and then we undercut. So I try to find that. Where does it hit? Does this one hit? Nope. Nope. This one might hit, right? So we hit a new time, we undercut, and then we hit a little bit of a resistance, right? And then we consolidate it, to go to the upside. But then I have to think, what happened in 2020? We all know. We started staying at home a little bit while more. So was that a black swan event, or was that more of a technical downturn because of highs before? So then I looked a little further back. What I started seeing was like, that was a previous uptrend. That was a black swan event, but the market could have been cracking already. I did feel it was cracking because it was cracking a tiny bit because there was COVID announcements. I did sell one of my QQ positions right over here before this week, which I did break market school rules, by the way. And this was one of the times I was like, yes, I'm a genius, until I messed up, which is always the case because we're all human. So then I started looking back. Once another time it happened, undercut. Yes, this undercut it just a tiny bit. And it pretty much never really went up for another 2015 to 2016, almost for a full year. It couldn't break through this resistance after it touched the top and just went sideways. But what's funny about the stock market is if I go back in time, even some more, where you go back in time to mark some more, it's like we go in 2010 now, right? We go to 2010, and what gets interesting is we have a huge uptrend, like 100% gainer. And we hit a new high. There's a previous high, there's a new high. And then we undercut it. I'm using some art right now. And we have an undercut. And right when we hit the previous high of the 52 week, not over here, we started they started going higher, and we not really look back. But let's say we're going to all time. What ends up happening? So I put up my weekly chart even more. This one doesn't high, beats the high, undercuts, never really got close to it and just kept on going downwards. So it's a little bit different. So hopefully all these examples help make you a little bit more confused, where it can go either way. It can go either way, where it can go up, it can go down, it can go sideways. And it's like you have to really feel the market out. Maybe by the time tomorrow hits, what I'm prepping for is, what is the market doing on the technical side? Here's the 10-day moving average. Here's the 21-day. Is it respecting the 10-day right now? Not really. There's an undercut here. It's almost on above average volume. Undercut here. So it does respect the 10, but there's been one undercut, so one violation. I can forgive it once. It's within my rules. I can give it one time. And this one, it closed above, right? Fine. But I could also say it touched the 21-day right here, and it's been respecting it ever since. Price does not come down here. It comes down here, it might go to the downside. But I really want to watch the first 15 minutes of the market. The reason why is because I want to see, are we going up here, then we keep going up? Or what ends up happening is we go undercut, go up, and we just go to the downside. Who knows what might happen, but sometimes you watch the market and kind of get a feel of what the leading stocks are doing, your portfolio is doing, and what NASDAQ is doing. Then we can find out what's really going on inside the market. Is there any other stocks you guys want me to answer tonight? Is there any other questions I can help answer?
Yeah, Floyd here, just one comment. If you're following the Bill O'Neill strategy, you look at both fundamentals and technicals when you're deciding to buy a stock. But Bill's philosophy is once you own a stock, you only focus on the charts and the technicals and let the chart tell you when to sell. If you wait for the fundamental news to come out, it will be too late. So let the chart tell you when to close out your position and nothing else.
That is true. So if anyone bought oddity on this earnings gap and proceeded to gap down, this is the ride. I don't know how to say it. This is crazy. But there's definitely these amps indicator of institutional buying.
Look at CoreWeave, CRWV. That one's insane. It IPO'd, I don't know, 6 to 8 weeks ago. So I got in at 39 and I thought I was a genius. I sold calls, and my CoreWeave stock got called away from me about a week ago at $85 a share. And I went from 39 to 85. So I shouldn't be crying too much. But when it got called away from me, it was trading at about 120.
How'd you locate this stock when it was at 39?
It was pure speculation and nothing more. Right, my son works for IBM, and my son told me you might want to watch out for this one, but it was just, he shouldn't ever base his purchase on tips, and so it was a pure speculation buy, nothing more. And so I'm not a smart guy. I lucked out on that one, but it just cracks me up that I thought I was a smart guy when I sold the calls. And I'll take my $85 a share, but it's wow. Now, maybe it's not time yet. This one has not had a major correction since it went on this uptrend. And if you'll notice, this company has never made $1 of profit. Never.
Yep.
So it was just pure speculation on my part. And sometimes they say what a blind squirrel can find an acorn once in a while. So I found an acorn.
That's amazing. How much do they charge? On-demand GPU instances. I was reading a
tell you
podcast.
that- Oh, sorry.
Go for
I
it.
think that profit when you buy a new, it's not that important. Amazon wasn't making money when it started, but people invest for the potential of a stock, not necessarily whether it's profitable right away. Obviously, if it is profitable, that's great, but I don't really look at that too much. But if there's potential and it's in the right niche and doing the right things and it's got the right partnerships, then yeah, I'm going to invest regardless of whether it's profitable or not. That's just my 2 cents.
Yeah, it's just my advice, George, and there's nothing wrong with what you just said. My advice is, though, if this thing has a gap down and maybe it's down for 2 or 3 days in a row, just be sure you have in your mind what condition would be such that you would close out your position. And maybe you have a position that's up 100%. And if it starts on a downtrend, don't wait to get out until you break even. Get out before that for sure. There was an IPO today, and I don't know anything about the company. And I don't have no idea if that's a smart.
It's a fintech
not.
company.
It's a what?
Fintech, financial.
Okay. It closed at 37. It got as high as almost 45, looks like. I didn't buy it. I was looking at it today. I didn't pull the trigger and buy it. I thought I was lucky on CoreWeave. Maybe I'll take a break and not jump on this one and see how it performs over the next few days.
This
I'm
might
still
be a
waiting on
good-
Databricks.
That's funny. There's a Databricks convention right now in town.
There's a guy named Greg Morton, who I think is the meetup leader for the South Carolina group. And he specializes in studying and deciding when to invest in IPOs. And I think Greg's probably got some YouTube videos out there. So if you're interested in IPOs, maybe look at some information Greg Morton's put together.
Yeah, I believe he also runs a service where he provides you with a list of IPOs that are worth looking at.
The problem with these IPOs is they get so much VC money that they don't feel they have to IPO. They get money thrown at them. So like Stripe is another big opportunity IPO. I think he would be the
Stripe's-
biggest in years, but they're worth so much. They've gotten so much in the funding rounds that they just stay private.
What's a Stripe worth these days?
A ton. My favorite 3 are Databricks, Stripe, and Anthropic. But I think the only outside chance of any of those the IPOing this year would probably be Databricks. But they said they might IPO last year and they didn't. And some of these companies want to time the market perfectly or whatnot.
It was crazy. Got a $10 billion funding round in December 2024 for Databricks.
Yeah, I think it's worth 60 some billion now.
Yeah, 62 billion in end of last year.
So you can see why they're not really, they get money thrown at them, then they don't have to go to IPO or they
So
postpone it.
what's funny is since I'm in San Francisco, I talk to a lot of tech people, and they're telling me secondary market's actually pretty liquid for the tech, like Bricks and a few other companies. Like employees can easily sell their shares, so they're not in a rush to actually IPO anymore because it's a liquid secondary market. Oh, so my other job is like working as a real estate agent. So they're like, yeah, I'll just sell my stocks in this company. I was like, what do you mean you sell it? It's not IPO yet. I was like, no, there's a lot of people just wanting to buy our company, so we can just sell it on our discussion forums and on the company website. And I was like, what the heck? So I'm like, sure, you're gonna sell $3 million worth of stock to buy a house. Okay.
Yeah, pay cash.
Yeah, that's what's happening in the Bay Area right now. Like Nvidia stock went up, right? We'll just take a look at Nvidia stock. And people are like, yeah, I can sell for 150. I've been working there for 20, 30 years. And other people are like, man, I sold my stocks for 30 million like 5 years ago. It could have been worth like 30 million now. I'm like, and this guy's, hey, yeah, I have $30 million worth of Nvidia stock because I never sold because I forgot about it. I was like, what the heck? These guys are crazy. One reason why the Bay Area housing prices are just ridiculous sometimes. It's people are just like, I'm just gonna sell some stock and I'll be done. And W2 employees can't afford multi-million dollar houses instead of being business owners.
Hey, there's a couple of old dog stocks that have come to life lately, Microsoft and IBM. I think Microsoft is at an all-time high and so is IBM. And you can see it wasn't that long ago. It was like $100 stock and now it's almost a $300 stock.
What the heck? Anyone know what's IBM doing?
My son works for them.
But they have Watson AI.
They've got, I think they got 400,000 or 500,000 employees. And so they're into hardware, they're into software, they're into AI. They're worldwide, but my son doesn't quite understand. He works for them. He doesn't quite understand why it's hitting an all-time high, but the employees are all happy.
Interesting. You're right. It is. IBM is also going to AI too. They're actually
They are
doing stuff.
leveraging, yeah, they are leveraging Watson AI for a lot of supply chain and a lot of different industries actually.
So I was reading about AI and I was listening to some of the speakers, and they're telling me that enterprise AI has not been implemented yet. On a consumer level, AI is being implemented by maybe you and me because I have Google questions to answer. For example, today I was dyeing fabric and I was asking ChatGPT, how do I dye fabric with this type of dye was wheat dye? And just give me the exact step to step, which is contrary to how the instructions gave it, but it actually did a better result. So I was like, that's pretty cool because it just says boil the water instead of 140-degree water because I guess there's lawsuits and stuff like that involved if they give boil water for every fabric.
We're finding AI is really helping people that are looking at mammograms and stuff. They're finding early indication of breast cancer 2 or 3 times faster than the human eye can recognize it. And we're probably going to see other things like that. In addition to some of the problem areas we hear where AI could be dangerous, there's other areas where, especially in medical research and medicine, it may take us to amazing discoveries.
Wow.
And probably displace a lot of people, jobs.
I'm not sure why you said AI is not used in enterprise. Currently, Microsoft is rolling out Copilot in big companies, or especially their IT coding faculty or developers. It's being rolled out, it's being used, and that's where they make a lot of money. So essentially, that's why the stock is moving higher. Also, now you must have heard the term agentic AI. It's still in very early stages. But essentially, just to give you a little bit of how it is executed, is essentially you will, instead of calling your secretary or whoever that person is to set up an appointment for a lunch or a dinner in a specific area, you will just tell the agentic AI what restaurant you want and where, which location, and the quality and all that stuff, and it'll do all the reservations and everything for you. So basically, it's doing the secretary's job. and that function will be eliminated. So a lot of those things
Yes.
are happening. It's been used, taking small roles right now, but as it progresses in the next 5-10 years, it will start replacing people with good professional experience.
So pretty much I did say AI is not used in enterprise yet. So I guess what I'm trying to correct myself, it's not everywhere yet. So Microsoft Copilot is one of the first ones, and they get access to like ChatGPT, which is open AI, but they're only on the only beginning, I should say. It's not fully implemented across all systems yet. And I'm also very excited for an AI agent for me, because I would gladly pay hundreds of dollars every single month if they can do some of the tasks that I'm hiring out for these days. Was it Guatem? Says IBM does quantum computing too. I thought quantum computing is not able to commercialize yet. So you're not able to generate revenue yet because there's a bunch of errors and little quirks that's happening. Please correct me if I'm wrong. I'm very unfamiliar with quantum. So what do we have? 25 minutes. Is there any other stocks, any other big ideas, anything that's on the end factor that anyone else wants to talk about that's on their mind?
One thing I'll mention, oil's up 10%, which people, Alaska will be very happy with that because we've got a lot of oil up here. Gold is hitting an all-time high right now. I think silver is not quite an all-time high, but after hours, your gold's up $54 to $3,456. And so I really expect to see significant down action on the open tomorrow morning.
Yep.
The uncertainty that gold becomes a haven where people sometimes go if they think there's going to be some pressure against the dollar or inflation, those kind of things.
Gold is not a hedge against inflation. It's a hedge against instability.
Yes, I agree.
So usually whenever there is instability across the world, most of the federal banks of different countries start buying gold. And with the current macroeconomics that's going on with the West versus the East, a lot of Eastern countries, China, Russia, India, they are holding a lot of gold.
What is amazing to me is 18 months ago, gold was $2,000 an ounce and you could buy it anywhere you wanted to buy it. And so gold's up 72% in the last 18 months, which is pretty amazing to me. And if you look at GDXU, I think it's up about 180% year to date. That's the miners times 3.
Oh my.
Nugget NUGT is up about 110% year to date. That's miners times 2.
What's the silver gold ratio right now?
It's about, it wasn't a few days ago, it was 100 to 1. Right now it's, silver's 30. So it's about 90, 94, 95 or so. I haven't done a calculator, but it was 100 a few days ago. Now it's about 95, 96 or so.
Okay, thank you. What do people think of the EV toll space?
Come again, George? EV, like EV charging?
No, toll, Joby, Archer Aviation, the little helicopters that are going to be like little Ubers.
Oh, what about that? We've thought about that in a long time. I have no opinion.
I really like Joby.
You don't have any opinion on EV tolls? Is it commercialized already, George? EV tolls?
They're already in Dubai, Archer, I believe, and they're going to be at the Olympics coming up. So they're definitely going in the right direction.
Basic. Oh, so in a past life, I used to be an aerospace engineer. So I'm like, EV tolls, they're insane. I'm like, the amount of engineering involved in this is just amazing.
What I don't understand is they said it's going to be the price of basically an Uber Black, which is a little bit higher than the regular Uber ride. But how are they going to make money like that when they can only basically take 4 passengers at a time? They're going to have to really.
I think I heard that they're going to start flying taxis from New York to the Hamptons starting maybe late summer or this fall for the first time. And I think they have one that can hold 6 passengers and a pilot, maybe. But I think the people that are going to the Hamptons, they don't care what it costs. If you can get them there safe and fast, that's probably what they're going to do. They don't care if it's $1,000 a person or whatever it is.
No, that was my point. It isn't expensive. They said it's going to be basically the price of an Uber Black, which is a fancy Uber, which is incredibly low to me.
Yeah, I just don't know what Uber Black would be from New York to the Hamptons. Is that 500? So I don't know what it is.
Oh no, much. I don't know how far to drive that is,
This thing.
especially with traffic.
Yeah, because I know to operate just a regular passenger aircraft, it's to break even for the pilot on an experimental aircraft, there's fuel, maintenance, and everything, because the FAA requires a lot of maintenance and inspection on aircrafts. So we're telling me it's the same price as Uber Black? Like, maybe?
I bet that number now is $300 an hour.
Yeah, because I just did a quick ChatGPT search. It was like per hour operating cost is $300 an hour, which is typical. How long does it take to get to Hamptons? Probably an hour. So it's 300, 6 people, $50 per person. Maybe if each person takes their own Uber Black, or maybe it's storage price. I don't know. This is beyond me.
And see, if they're flying someone to the Hamptons, they're probably coming back empty.
Coming back from the Hamptons, how do you get the round trip cost? So you're doing, let's say 600, so it's $100 per person now. I don't know. The math doesn't make sense.
So anyway, let me see the graph on Joby, because George has been talking about Joby for a long time now. So I've got the magic question for you, George. Do you own it?
No,
George, what are you doing?
I'm still feeling things out. There were some-
Don't bring up stocks that you don't want to own, buddy.
I'm still feeling things out because it's still a very nascent technology. There was some talk about Archer Aviation and some shenanigans.
Hey, George.
recently.
Hey, George.
No, I know. There's a lot of stocks I'm looking at that I'm not in. Rigetti Computing or IonQ or stuff like that.
Yeah, it's like you're searching for the big N factor to put into IBD terms.
Or you just own TQQ and SOXL and ride the wave.
Soxel is
Check out
what?
QBTS.
That's another one, QBTS and QUBT or whatever.
There's another one that hasn't made $1.
Volume 50 million, $15 stock, 750 million. Wow.
Yeah, at the top it says the average daily volume is 70 million.
Yeah, it's just
Oh, wait a minute. James says the CEO sold all of his shares in IONQ this week.
why would you?
How do you know that?
We're in June. I thought it doesn't get released for another few weeks. Let's do a quick Google search.
Oh, that's so. Would it say 9,000 shares? That's nothing.
Yeah, it says 9,000, but I'm
That's-
clicking through a few one.
That's minuscule.
But let's look at the filing instead. I think the filing is always more interesting. So yeah, 9,280. Past 3 months.
Maybe he wants to buy a Ferrari.
Is that enough for a Ferrari? That's the teaser price for Ferrari to get the first 2 cars.
They've
Just
come
9,000
down.
shares.
Yeah, that's not worrisome.
I think this one just hit mine. I need to put the link. I was like, 100 million worth. Management was 5%. Oh, sorry.
Wait, what
Yeah.
happened?
Sorry, I was switching between screens. I get trigger happy sometimes. Yeah, so 9,000, maybe. Good night, Pat. Any other stocks people want to talk about? We have about 10 minutes left.
I was just going to ask, does anybody play volatility as in VIX options or VXX or UVXY?
No.
Not me.
On IBD Live this morning, they mentioned an interesting index. I think it's called Granny. A symbol is maybe GRNY or something. And did anyone hear that this morning?
Granny shots. It sounds like
They said it was outperforming several other indexes on IBD Live this morning. So there's the top holdings right there. Oh, someone said it's made up of hour style stocks. Does that mean IBD style?
no,
Top holdings.
I don't think these are IBD style from the look of the. Oh, it says IBD style per Scott. Thank you, Pat.
Anyway, that's the first time I've ever heard of it this morning, and didn't know if other people had heard the same thing, but they said it seemed to be one that was going to have potential to do.
It's got good stocks in it.
Yeah, it does. Interesting. I'm just gonna add this to my. I'm gonna add this to my buy ready list. I'm gonna look at the stock a little bit more.
It's interesting, in the recent downturn, it got cut in half from its IPO, and now it's clawed its way back.
Yeah.
But this isn't leveraged, right? It's just
Regular stocks.
Yeah, it doesn't say leveraged. It just says it seeks long-term capital appreciation. Anyway, I heard it for the first time and thought I'd share that with the group. It's up 50% from where it was in late April. A whole lot of things are up 50% since late April. I think SOXL's up 100% since late April, I believe. You bring up SOXL, I think it went from 11 to 20 something. It got all the way down to 7. So it went from 7 to 21.
Yeah. Stocks will took a big whipping.
But it'll probably have a gap down in the morning.
what costs
believe
to
it.
do that.
Well, the strength and the high-tech stocks have done amazingly well. Like, we just looked at Microsoft and we just looked at IBM, and there's a whole bunch of them that have done really well in the last 4 or 5 weeks.
That's insane. But to hold it from $70 to $7, 90% drawdown, that just hurts.
That's why you have, on leverage ETFs, you have to have really strong sell rules. And when you get the sell signal, you can't say, I'll wait one more day or wait one more week. When you get the sell signal, man, you got to dump it right then.
Yep.
Because look at those 3 down days in September when it went from like 70 to, look at July. It went from 70 to 23 in a very short period of time. And look at that giant gap down that occurred, and then a down day on July 17th or whatever that day is. And so when you get a sell signal, you got to get out fast, because these triple levers can move, really move.
And
either
2 days later.
if you look at TQQ and put in 2000 when the COVID thing hit, and look what happened to TQQ,
Right over here.
59 to 16, but then look, it wasn't all that much later, and it got all the way up to 87. 16 to 87. Look at that.
That's a happy camper right there.
Have these leverage ETFs ever had a reverse split because they get so low?
No, they all started after 2010.
Yeah, but to answer the question, I think the inverse like SQQQ, I think it's done a reverse split.
Yes.
Yes.
So if you want to understand, like the reason they do reverse split is because they don't want to get it delisted
Right.
from the exchange. So if ever we go in a 2008 like crisis or 2000 like crisis for multi-year, you will see reverse split on TQQQ, SOXL, and all those ETFs. Which is also the reason why you will not buy and hold those ETFs. Otherwise, your portfolio will evaporate like crazy.
I don't, correct me if I'm wrong, but I'm pretty sure TQQ has never done a reverse split.
Right, because it started in 2010 and we have not had a severe recession yet. But if we go in a multi-year recession for next 3-4 years, then we will get a reverse split on TQQQ, SOXL, everything. So Excel actually came very close. It was at $7 at one point.
So that's why you got to have really tight sell rules if you're going to, just like that photograph I had a couple of months ago with the guy with the hand grenade. if you want a triple livers ETF, assume you got a hand grenade and someone's about ready to pull the pin. And if the pin gets pulled, what must you do with the hand grenade when the pin is pulled? You must throw it as far as you can, right? Or you can get hurt.
Yeah, TQQQ was like $8 a share in March, April 2020. But
Yeah.
then in 15 months, it ran up 1,000%.
Yeah. Hey, good session tonight, Haley.
I think we can
Just,
yes.
just for information's sake, if anybody wants to buy and hold, then there is a very good tax efficient ETF SPYI. It's very new. It's probably just 2 years old, like maybe 1.5 years. It pays dividends every month. It's extremely tax efficient. And they do something called return of capital or something, which is also a new tactics in tax efficient ETF. And if you want to pass along to your kids or whatever, this is one of the best vehicles that I've come across. So do your research and see if you guys like it.
And can you sell calls on it also?
Not yet, I believe. They don't have a good liquidity on it yet.
Okay. Because if you could get a dividend and then sell calls, that would be sweet.
Yeah, yes. True.
Any other questions before we close out for the night?
Just wondering, when did you get into TQQQ? And I'm assuming you're still in it.
I got in. Let me check my phone.
Oh, this is for Floyd. I guess it's the same.
Not for Floyd. We both got in around, I think he got in a little bit earlier than me because I remember he got in at 46. I got in at 53.
Yeah, I got in at 46, which was probably about maybe 417, I think. 417, 418. I got it at 46. I think I bought more at about 52, and I still hold all the shares that I purchased. I got into SOXL at about maybe $12 or $13.
So I got in on the 24th. And let's look at Floyd's. All the way around here too.
Yeah, so I bought around, I bought in there, and then I have my initial purchase on SOXL. I doubled up on TQQQ, bought initially at around 44, 45, whatever the price was, and I bought more at about 52 or 3. And I'm holding all the shares. I'm tempted to sell calls on my TQQ and SOXL, but I haven't done it yet. I'm pretty sure we're going to see a gap down tomorrow, so I definitely am not going to sell calls after a gap down. Hopefully, if there's a gap down, hopefully it's a temporary thing, but if Iran retaliates and then Israel retaliates back again, it could get pretty dicey over there.
What was the news?
It only just happened a couple hours ago. Iran was attacked by Israel, and they bombed many sites. Some of them were ballistic missile sites. Some of them might have been sites where they're trying to make nuclear materials. So it's unclear to me exactly how many places they struck, but they hit multiple places at the same time. And the U.S. is saying they had zero involvement.
But the weapon is from U.S.
What's that?
Probably.
Yep. Very likely.
Let's see, it says Secretary of State Mark Rubio said the United States is not involved in the strikes.
Yep. Any other questions before we end the night? Cool. So thank you everyone for attending, especially Floyd, because this was my first meeting by myself and he let me run it full haste, and he's been supporting me from the rear because I've made a few mistakes while trying to organize this meeting, like new email, new signatures. And George, thank you for the feedback on the emails, because I realized I did not forward the emails correctly to my other email. So I wasn't getting all the emails. I appreciate that, George. So thank you very much for everyone who's attended, everyone who asked questions, for answering the polls, especially just thank you for joining and just listening in. Hopefully this was very valuable to you. If you have any other ideas, feel free to email me and I'll send out the recordings, a summary, and also the slides I presented tonight. So thank you everyone for attending, and I'll see everyone next month on July.
Thank you.
Thank you, everyone.